Right. Good afternoon, all. So welcome to the introduction to financial market. So today is our first day. So I couldn't conduct the last week. So today we are going to start. I hope now you have already started the sessions with the other lecturers, and I met you during the first day, very first day about at the inauguration, right? I hope now you are everyone is help ready for the our session. So we will be meeting next like 8 days, right? The feedback interaction very much important because of the arrangement. So we are conducting online. I can't see all, right? So because of that, so you have to be very active, and you can come through chat or you can ask question. So if you have an interaction session only, so I also can conduct the session very fruitfully, right? So then you can get the best out of it. So with that, we can start, right? I would like to have some interaction with you, just to check why do you want to follow this course. And this is our 12 batch. So over the period, with the feedback we received from students, so we have, especially in my area and the other lecturers also, so they have a little bit improved the program, right? That to serve you better. So if your feedback will help me to customize it a little bit, if I am not covering the rest of the sessions what you exactly want, right? If not, your feedback will be help us to develop the curriculum the next time when we are doing the next batch, right? Now it's open for you, so you can come through chat or you can speak by unmuting yourself, right? So why do you want to follow this course?
I I follow this course to uh, obtain financial freedom and become an investor.
Uh, just to understand the finance. Can you repeat it? Yeah, Priyanka, yes.
So I want to become an investor and have
Okay,
my financial freedom. That's why
okay,
it's the question.
okay, good, good. Yeah, I think that you can get good idea on that. And Chiran say, I would like to improve my decision making. Okay. Dilan say, get knowledge for investing in share market. Okay. So all of you so far, so we can cover your requirement. Any others? Yeah, it's up to you. Yeah.
Yes, actually, I'm a trader, so I do
Okay.
international market, and I don't have any I have ideas on the market, but I don't have that much of thorough idea on CSE. So
Okay.
I wanted to continue this, and I want to know how these markets works and what are the strategies that I can implement if I join in the CSC.
Okay. Okay. Right. Good. Okay. And Deepali said, I want to learn about making good investment decision on CSC and also to understand how to make stable income through trading in investment. Okay. Sampath, I am an investor and my ambition is to get good knowledge about capital market. Okay. Kumar, take best investment decision. Okay. Yasit, get insight for my research in university. Okay. So you may be a student at the university and want to make right decision when invest. Okay. To get the knowledge in investing share market, Nirodha, I want to directly invest in CSC. Okay. Yeah, so far I think we are good. And if you are joining from other than Sri Lanka, so from other market, so please, when we are discussing relevant areas, you can share your views and what are the practices in your countries, your jurisdictions, because that also will help our student to get more idea, more comparable idea, right? So it's a share market is a equity investment is a universal thing, but country to country there can be some changes, right? Savindra said. I want to directly invest CSC for good bit. Okay. Yeah. Any others? Yeah, you can speak or come through chat. Anyone? So we have around 40 odd students today. So this I would like to give all of you the chance. So
Actually,
far,
I'm out
yeah.
of, I'm from actually overseas.
Okay.
I invest in US and Hong Kong exchanges. So
Okay.
I'm just start. I really interested in Sri Lanka as well because the the whole scenario is changing. So
Okay.
I'd like to get more knowledge and improve my
Okay. Okay, good. Okay. So when I think you also can add some value since you know the other market. So when you are discussing, so you can add more value, right? Okay. Others, we can give you another few minutes. Yeah.
I joined this because I want to invest in financial markets, and to that I need the basic knowledge. I am in the market right now also, but I lacking the fundamentals.
Okay.
I don't know how the market works.
Okay. Okay. And yeah, Abdul, more you learn, more you earn, right? Correct. Then one, I want to make some investment decision in CSC. Okay. Thank you very much. Most of you came through chat as well. Yeah. Any others? Any more? Anyone would like to add? Right. So this Kamal, I have already invested in market. I want to improve my knowledge. Okay. To get the knowledge in investing share. Okay. So all of question I think during even my area and other, as well as other lecturers area. So we are covering. And don't worry. So actually we are covering more than your expectation. Correct. So this one in this subject, the introduction to financial market, where I am supposed to actually deliver. So I will give you like the actually this is the connecting subject to other lecturers. I will give you both brief overview about stock market and the other market, the like the fixed income market where the corporate debt market, the treasury bill market, and unit trust market, right? And property loss area to some extent as well, right? So that's the objective, the many areas on stock market and the other market as well. So that's the objective. So this subject will give you knowledge about the market, about the instrument available, right? Some of you may aware, some of you may not aware. And if you are aware, so you can get some little bit more information. So that's the objective. And I think you have already started fundamental analysis and the accounting subject also. Then those two subjects also complementary. So with this knowledge in this subject, you can learn the other subject well. So then the next time, the next semester, again, I am meeting you with the financial segment analysis where we are discussing about more on analyzing the income statement, balance sheet, of different industries. So we have around 22 different industries, right? We are our exchange mainly the banking and finance heavy. Yeah, apart from that, we have hotel, plantation, manufacturing, and conglomerate, like diversified for conglomerate. So very much around 22 sectors. So we will be analyzing like a few sectors. So that's the next subject. But this subject, as I said, the mainly we will be covering to try to give you insight about the market, right? And so I would like to encourage you to have more interaction. So then from your feedback, I also can learn, the other student can learn. So we can have very interactive session which will be benefit, which will be help to everyone to benefit. Right. So I think what are the available investment opportunities? And some of the thing I mentioned, right? You can invest in, you can start your journey with savings account, fixed deposit, and then the stock investment, property, the corporate debt, the government securities, unit trust, the gold, right? You have many product to invest. So out of that, so we are going to specifically discuss few market, right? In during next 8 days. So I am going to give you basic insight about those market. I think you have now aware about the difference between saving and the investment. So that is very much fundamental. Now I see anyone what kind of percentage new to the market? If you have anyone not invested in the market, out of today we have around 43. So let me know how many of you are new to the market, you have not invested. So I want to see the I'm a cardiology student, but wanted to learn. Okay. Okay, thank you, Tegma. Tuan, yeah, sorry, Tuan. Yeah, anyone who's new to the market who have not done any investment? So how many number? I am not invested directly. I have invested via mutual fund. Okay. Anyone new to the capital market? No, not done anything. I think some of you said that you have already invested and you want to further enhance. Okay. There are few. I haven't invested new. I am new to the market. Okay. Two guys. Any others? All are slowly investing. Okay. Only two guys into the market and one through mutual fund. Okay. And let me know your age group also, like 20, less than 20, anyone? Okay, Chaturika new. Less than 20, anyone? Then 20, 30, can you type certain your age bracket? So then it will help me to little bit customize. I want to know 32, okay. 23, 33, 29, 20, okay. 20, youngest so far 20. 55, okay. 41, 54, 42, 45. Okay, so we have like young ones and what number of middle age? Okay, 43, 45. Okay, so we have a couple of 40s, 31. Okay, so investment journey. I think I also mentioned in the very first day, the regulation also. If you have started early, the better, right? Why we say early, then you have more time to invest, right? So don't worry if you have little middle age, so don't worry. So you have at least happy you have started somehow. So start is the very important thing, right? Start is the very important thing. So if you have early started, someone is 2020 or something early 30s, so that is very essential. So you have ample time to invest, and this is very essential. And um, I think some of you may having a financial accounting background. Some of you may be on different. You may be like someone like maybe following the medicine, maybe cardio medical profession, doctor going to be, and then maybe you may be marketer, lawyer, right? Then the supervisor, come from entrepreneur, right? Different discipline. But your success in life, especially the investment, will depend on how you understand the market, right? That is very essential, especially if you are living here. You to understand the country perspective is very essential. That some is 80. Yeah, so far, what you mean? Right? Sorry. Yeah. As I said, how you understand the market will decide your wealth in future. Whoever you are, so you are earning by doing salary, maybe, or you are running your own organization. Whatever the income you earn, you have to invest. So then only you can multiply, right? So the fair value, those area, the compounding power of compounding, those are very essential. You to achieve the financial success, financial well-being. So fair value is very important. Otherwise, you will get only the interest. So interest won't enough you to achieve success. Right? This is very essential in here in this subject as well as the other areas. So we are discussing about those aspects. How you multiply your wealth. It is in very legal way, right? If you understand well, so that you are the winner. especially the people with financial guys, so they follow in university and as well as their higher education, maybe ordinary level and advanced level, and then of course when they are professional education, so they are covering little bit of these not little the fairly extended content on these financial matters, but unfortunately, so they have to make it like more theoretical. So they are more on theoretical, but they have to see how practically they can do that. So this course will help you to practically understand. Unfortunately, we don't have the similar course here. You to how you link your theoretical aspect and invest those things to make it your own benefit, right? And so I will, during this course, I will give you a lot of website and different areas. So that's for your benefit. If you, because you are the winner, if you understand this thing better, so then you can invest properly and achieve investment success. So whatever the risk as well as reward to you. So you work hard, so the benefit come to you. So not me, right? So then you have to start learning in that field. Work harder the worker, right? I think someone said learn more. Same thing, if you work hard in this area, if you understand the things, so that is your own benefit, right? And I mean, all of you know, probably everyone have a saving account, current account, right? So this is something not new to you. The saving won't make you richer. The saving only give you some financial comfort. So with the saving account, so you will be having adequate liquidity, right? So saving, low risk, of course, low growth. So risk and reward is the very essential aspect you need to start understand early in this course, right? And the saving, as I said, I am repeating the low risk product. Why? And Sri Lankan law, as Sri Lankan law is concerned, up to 1.1 million in your deposit in the bank, it's insured. Something happened to the bank you invest, and so bankrupt, the insurance scheme will pay you up to 1.1 million of your investment. So more than that, they will give you pro rata basis, right? And because it's more secure. But since it's the more secure, it's a trap we call low risk. It's very remote that the bank will go bankrupt. Your investment is secure. So when your investment is low risk, obviously you have a low growth. Your return is low, right? Low risk, low growth. Low risk, low return. So that's you need to understand. And you have to learn little bit of slowly understanding risk. So that is very essential in your financial success, right? Now, people with gender, people with based on your age, you are a little bit, your risk acceptance is different. We have risk averse people, right? And we have risk takers in life. So there are some middle path following people also, right? So based on your the degree in which you can accept the risk, so your financial success also will be varied, right? For all of you, you need to take some risk in your life, especially this financial. So otherwise, if you are not willing to take any risk, so then it is very difficult you to go for higher growth, right? That's you have to understand. And saving, you should not keep much more money in the saving account. Only we say, and like a thumb of rule, maximum like 3 months of your earning, right? It's because say your monthly salary is 100,000, so you should be having like 300,000 in your saving account because your expenses based on your lifestyle. So your lifestyle is normally depend on your income. So if you are 100,000 monthly earner, so 300,000 is enough for your lifestyle. Some urgent family events like funeral or something, or someone sick, right? Saving is only for this emergency. Saving is not an investment, right? So you need to differentiate saving with the investment. Saving is you are keeping some money in liquid money you to get for some emergency, right? So that's the purpose of saving. So because of that requirement, because of that objective, you should not keep more money. If you are a 1 million earner, So maximum 3 million is enough. So more than that, if you are keeping more than that in the saving account, you are unnecessarily keeping money at lower return, right? So when we move forward, you can see the why I am saying, because the interest rate is exposed to inflation. So then your real growth may not be there, right? Because low growth, saving is very low growth. And investment, of course, you can start with the share investment, property, the land, gold, lot of things. Those are all investment. So investment always attract high risk. And of course, high risk will give you high growth, high return, right? So that's the pattern with investment. Higher the risk, higher the return. Why we say high risk in share market, the amount you put, once you invest, sometimes the share prices can come down. The share prices can go up, can come down. If you go up, it will make you richer. It will come down, it will make you poorer. Right? So that you need to understand. So your fortune might change. Unlike saving, the saving, at least, even though they give you low return, low interest, but the amount you put is safe. In share market, sometimes the amount you put, the initial investment also can come down. And whereas in the market is in increasing stage like now, so your amount you invest can be double, right? So then it works both ways. You need to understand. You need to know your risk, right? So then only if you are ready to take some risk, so then only it open doors for you to take higher yield. But as I said very beginning, you to maximize your growth in financially in your rest of the life, you have to have some kind of a risk acceptance. We call it risk tolerance. You have to learn that art, right? Everyone who success in market takes some risk. Okay, so with that introduction, are you an investor? Some of you, some of you already investor in not only here in Sri Lanka, some the other market also, right? So I assume we have like a blend of the crowd. Some are already investing and some are new to the investment. Some are investing in other market. They want to know Sri Lankan market. Uh, Hello? Sorry. No, I think I muted. Yeah, sorry. Can't hear. Yes, I muted. I got the call. Sorry. Right. I think we have the mixture of investors. So let's, I will, there are few guys new to the stock market, and so we don't worry. So we will be covering all of your requirement, right? So risk and return is very essential, and that's what I explained in the very beginning also. There is no return without taking any risk, right? So the share market go with the risk. You need to understand. Stock lower risk means lower return, like saving. Stock have higher return because they are risky, right? So that is you need to understand, right? So with that we move. Here you can see how you balance risk and return. So your success is depend on in your life, especially in financially, how you balance risk and return. So if you take now FD is something like right now the 7 to 8%. So investment grade, like we have a rating, so I will cover up when we move forward. Investment grade little bit higher risk, around give you like 10%. Like shares, so unlimited, right? There are more than 20, 40, 100% return you can earn through shares, right? Through shares. But you can see when you maximize your return this side and your risk also expanding, risk also enhancing. So that's the pattern, right? That's the pattern. So all these investment go to this part of the diagram. You can see high risk and high return, right? Here, the saving somewhere here, low risk, low return. Okay. In you are maximizing return means you are actually balancing at risk and return. If you are more risk averse, you don't want to take any risk, right? So then your return also very low, right? So if you want to take high return, you have to take some risk also, right? So what is the stock market? So you need to understand stock market. So for the benefit of everyone, so I will explain what we can do, right? In the example, say I have a land uh, in the beach front land in down south, say, right? And so I have a land. Then I want to build up a like small hotel, right? Like 10-bedroom hotel, fancy. So now where I don't have I have only this land only. I don't have capital, the money to build up this hotel. So what we can do, so we can estimate like the 10-bedroom maybe cost 100 million, right? So this right, 100 million. And so I need to get 100 million to have this hotel. Then I have a chat with my friends who agree to put this 100 million, right? So then should I have 4 people, friends, and with myself, we have 5 people, my 5 people, right? So then say uh, this land alone worth like 20. So we have around 120 is our investment after the hotel. After the hotel. Hello? Oh, right? So then, so total investment 120 million. So we have 5 million. So around 24 million each. Everyone need to put for this investment, right? And so then with the friends' money, so I can develop this one. So then the friends are keeping sending money to this one. So they, even though they're friends, so they don't. So they are asking me what the security you can give me. What the security you can give me, right? So we are sending this 20 million. We are investing around 24 million in this venture, right? So if they forget this one, so I am saying my investment is 20 million, the land. You have to pay then only 4 people, 25 million each. So they are asking, so what you can offer? What the security we have for my 25 million? For them, we can give like a certificate. So indicating their 25 million capital for this venture. So this certificate, we can later say the share certificate, right? So then after that time, so we can develop this hotel. So now after 1 or 2 years, so we have a hotel with 10 bedroom. So we are now accepting guests. So we actually have a running venture. Right? So we have friend like A, B, C, D, and I am E. Say we wanted to exit this venture after the running operation. So we want to exit. There is no exit mechanism. So then B supposed to find either B's share components is 25 million we have to pay. Right? That means B had to bring another guy called H or someone we have to sell to that one. Or rest of us need to buy this share. So one option is 25 million. Rest of the A, C, D, E. So we have to share. Equally contribute and take it. Or B has to find investor from outside. We have to find investor from the outside. So this mechanism takes some time, by a lot of involvement like that. And so one of the easiest option is, so if you have a option, if you want someone to exit, so you can list this running company in the share market. Right? If you have listed this share in this particular restaurant in the share market, where if the B wanted to exit, so we can sell its stake in the share market. Then whoever wanted can buy. That's the market we call share market, where shares are publicly held companies are bought and sold. So companies whose shares are listed in the share market, their shares are trading. So investors can freely sell and buy and sell shares. So that's the share market is the market where the shares of the publicly listed companies are trading. Right? We have around 290 companies so far. So in Sri Lanka, we have 15,000 odd companies, but most of the companies are not listed. Only 290 companies are listed. In the share market, the investors of those companies can exit or can buy. Right? If you are new to the market, you also can buy from that 290 company shares. If you think that these companies are attractive, so then you can buy. Right? So then you are buying from the existing shareholder. In the buying option, I will later cover in more detail. We have two options. One is we call primary market, and the second is secondary market. The primary market, where this explanation at the time of the company initially listing. So with this, once we have done the hotel, and the very first year when we can come and list, where all of us A, B, C, D, everyone is there. So that's the first time primary market where company can list. Right. So then after that, for the secondary market means the investors can buy the original or initial shareholders A, B, C, D, E. So then subsequently after 5 years, only A may be returned, may be there. All the others have existed to the market, new investors, X, Y, Z like that. But you need to understand So you come and go, the investors come and go, the company remain. Now, if we have a John Key sorting, the largest company in the market, right? And then, so they remain more than 100 years old. Right? No investor, the original investors now no more there, right? The investors come and go, and the company remain. And before John Case, we had the one big company called Expo Lanka. Right? That was our largest company in the market. So that company now delisted. So they came, right? They came as a small. Some of you may would have bought its shares, right? So that company came in the market like in the primary market around 2.5 rupees, 2 rupees and 50 cents. And during the COVID time, the share price went up to nearly 400 level, right? So it has a journey. And then it went up to like from 2 rupees to like 400 level. Then after that, it price came to around 120 or something. Then company gave offer like buyback 180, and the investors bought at 180 after some time. Then the company exit from the market. So as I said, the company can have its own journey, right? You come and you stay. If you are long-term investor, you stay with the company. So then you get the benefit of capital appreciation. Capital appreciation, right? Now, so I would like to give you some example where right. So last year, this company came, the pick me. Everyone knows its name is Digital Mobility Solution. Right, you can search any company from here. So right now price is 123.25, 123. So this company came to market in last October, where the primary market. So this one, like you can check the other report, and the prospectus is where they we call that's the invitation to the public, the initial public offering we call IPO. So I will discussing more on later. And here you can see the pick me the day last September, right? Almost 1 year, almost 1 year, and the issue price was 36 rupees. Issue price was 36 rupees. And that time, I can remember investors are saying issue price is too high. But company, actually, when you are buying, you have to compare on today's price. You have to see what kind of future this particular share will have, this company will have. So you need to have that forecasting ability. You are paying for future, right? So some investors are saying 36 was too high, some didn't purchase, but some investors purchase. Now see after 1 year, if you go back and see, right? If you go, so you have to see positions. Have you understood this one in the prospectus? They give you their plan. You can read. So they give you their when you go down. So they give you like comparison they gave. So they did the valuation based on valuation around 43. The discounted cash flow, PER. So those method our average price was 43. So they gave to the market like some discount. And then they have done some comparison with some other investment. So there are stories there, right? You can see they are pick me about group structure, and so they are food reliability, fast delivery. The business case is given. So you need to read the business case, right? You need to read the business case and understand their story. If you are believing their story, if you see this company has a potential to go up, then you need to buy. Because some say the price was high. But see, if you go back and see, like after 1 year, price is September 13th, the 1 year. Company listing something 1st August, 1st October, I think they listed. Right? Company listed on 10th October 3rd. Right? Another one more, like only 11 months already. See the return. Right? See the return. So now 123 minus 36. So less than 1 year, around 242. 242% is the return for 11 months. Right? So that's the power of market. But I'm not saying every share go like that. And we had like another one, the Heller, right? So that's why you need to believe the company, the story. So they are right now 350. So they came into the market in some time back in 2022, right? So their price was 15. Their price was 15, 22. 22 January, 22, 3, 4, 5. Almost 3 years gone now. See, they came into 15, but now uh, 350. So there's a minus return. 350 minus 50 divided by 350 minus 15 divided by 50. Right, around 76% the loss, right? Annualized the total. So is it 3? If you divide it by 3, the average 25% per annum loss. So you can see the work both ways. That's why that's the risk. That's what I am saying, the risk, the ability to understand the bigger picture. Ability to understand bigger picture is that, right? And another so some concept I will discuss, so don't worry. And this is the primary market. So those all are new companies actually to new shares, but the existing ones have given better return also. These are new companies came into the market last few years, right? And so another company I will take it, the First Capital, FCT, right? So now around 28.6 now today's price. So now 28.6 as at today, like just last Saturday, last Friday, 29th. And so this company came into the market like 21, around 39. So you can see that also new company came into the market in prospectus 21. So they came into the market 39. rupees per share. So 39. So then after some time, so they give the share split. The share is now, we call a lot of corporate action, right? Companies do a lot of things. When you are holding, so don't worry, some concept I am discussing, so I will be discussing much detail later, right? So I will explain it later because you need to understand this market jargon. And what you understand in the share market, probably you may think that you buy today at 10, if the say few days after it will go to 12, so then you getting 2 rupee profit, right? 2 rupee, right? So then the return is 2 divided by 10 into 100, like 20%. 20%. So that's the one way of looking at. So share market, the price not always go up. It sometimes go down also. Right? So you need to understand the world reality. Globally like that. Any market won't go up. So there are up and downs. But essence is that, so any market, the Indian market was fairly in last few years, very much in upward trend because their economy is prosperous. But now because of this Trump tax, they have some issue. Any market go up, go down. But the key is the long term, you have the upward trend. That's the essence. So if you buy here, you have a problem because if the market come down, so you are having losses. But again, market bounce back, come down. So no one can't predict this. We can't time the market. No one knows, right? So if you see this is the peak, you better exit. That if you are long-term holder, you can keep it. These lows are short-term. Always markets bounce back. Now, if you see Sri Lankan scenario, I think we are the good example than any other country. So since 29, if you take, we had the East attack, the hotel sector tourist down, tourist arrival came down. I mean, this has an impact to market. So then after that, we had COVID, right? Then we had economic crisis. That's one of, right, the worst economic crisis ever happened in Sri Lanka. I just say all of you, including me, is the first time. We don't know the gravity, the extent. I also thought that time, so end of us, end of our country, our future, everything. But see, the country came back. Now, right now, even the last thing, they didn't do the vehicle import. They also allow, now we can see record number of vehicles at this higher taxes also coming. Right? You need to understand everything. Setback is temporary. All setback, but market is coming back strongly. So over the period, your long-term keeping, your growth is permanent. But if you are a trader, buy and sell, so you need to see your peak. You have to possess what is your low. The high and low you have to see. High and low you have to predict. You have to see. If it is higher, it is gone to peak level, you think that is enough for me, you go out. Market will have some go, again come down. Right? So that is very important you to understand. But over the period, it will go up. Right? So here, the 21 day and issue price was 39. Right? For the then after that, they did the share split. Share split means they give you more number of shares. So earlier they had only one share equal 39. What they did, so keeping the same amount, they gave 4 shares. Earlier issue price was 39. They did the 1 for 4. If you have a 1 share, they will give you 4 share. Okay. And then, so then the share cost was, so 39. I had, say if you have a 1, you get 4. So then per share cost is 9.75. So this is the cost now. You bought at earlier 39 per share, but they did a split. They said, okay, if you have 1 share, now you can get that investment is worth 4 shares. As a result, your per share cost came down 9.75. So since then, they have given dividend. That also you need to understand. So the company making profit, they give you dividend. So one way of you can earn from the market is they give you dividend. So they have the price increase as well as dividend. So your return come from 2 ways. Price appreciation. So if you bought 10, now 12, price increase is 2. Right? The dividend is per share, they will give return like per share 2 rupees dividend. So then your total return is the price now 10, you bought at now 12, you bought at 10, plus you got 2 dividend. So your return is 2 plus 2, making 40%. Right? So the dividend is something which you never expect from saving account. FD account, the fixed income can't give you dividend. Only share can give you dividend, right? The apartment, housing, land also can give, right? So if you buy a house at 10 million, so 5 years later it can be 12. This 2 million we call fair value. So that's what you have to work for, that fair value. So share you bought 10, a few days, 1 year later, 2. The 2 is the 2 rupee gain is what you got from heaven. So you need to rely on that. Saving account won't have that gain. But the properties, apartment, housing, land, so they are also performing, but the only drawback is, what is the only drawback? Anyone? So how you differentiate, since I spoke few more minutes, so I would like to hear from you. What's the main disadvantage with properties?
The
Any
value
thoughts?
depreciate with time.
Value?
We can't
Sorry?
sell immediately. We can't sell immediately.
Yeah, I think that's the correct. Yeah, low liquidity. Right? That's the issue with the properties. Your wealth is normally preserved, right? The property also performing well, the value appreciation, revaluation, land prices. I think recently they say Colombo land prices went up around 30 or 40%. The apartment, properties, housing, everything go up. But only issue is the liquidity. So if you want money back, you have to wait. You have to put advertisement, then the buyer comes. So buyer negotiate, then buyer say, okay, total amount I don't have. I have to go for bank loan. So then the lot of document for bank loan, right? From deed, right? Lot of things can come, the stamp duty. So take some time. But definitely value is there, but take some time. But share, the advantage is same, and the share can outperform properties also. But more advantage is it's highly liquid. If you want to sell, so just put in a sell order tomorrow. So there can be buyers, right? Immediately you can sell. And taxes also no stamp duty other than Sata Cess and levy. There is no tax. There is no tax. Right? So there's no capital gain tax in Sri Lanka.
In Sri Lanka, don't take tax for the dividends, is it?
We can't hear anything.
Wait, actually, I had some issue. Wait, I will show that. Right, you can see, hope you can see, yeah. Dividend here, January, they have paid a dividend. How much? Here, 2.6. Right, they have given 2.6. Uh, 2.6. So then again, when you go down,
So what does that mean, voting in front of that 2.6?
here again, last year March, 4 rupees and 50 cents. Again, 10 rupee. Again, 23 March again, 1 rupee and 50 cents. This is a subdivision, right? This is a subdivision. You can see the amount they have declared. Wait, actually,
Recording in progress.
Right? I think someone is saying not hearing. I think hope you can hear me, right? Yeah. So these are the dividend. So you got how much you got? You got 2.6 plus 4.5 plus 10 rupees plus right. You got 18.6. 18.6. Right now price is 28.6. Right, your what I am going to highlight, your cost was 9.75 in 22, right? 21, right? 21. And now you have already received dividend more than that, double the price. You have already received dividend more than that. You have already covered your investment. Right. So that's what I want to highlight. Within 3 years, you have already covered. Not within like 23, within 2 years, you have covered. So they came to the market in 21, right? 21 December only prospectus, 22 early only they listed. And because of that, so what I am going to tell you, so 9.75 was the cost, right? And they have, we got dividend more than that. So our 18.6. So still you can earn, having covered double the amount you invest, right? Having covered 2 times the amount you invest, and again, still market value is 28.6. Still you can, so see what's the right now 28.6 minus 9.75, and then you got 18.6 divided by 9.75. Around 597. 18.6, 28.6 minus 9.75 plus 18.6 divided by 9.75 into 100. Around 384. 28.6 minus 9.75 plus 18.6. $384 divided by 3 years. That's wrong answer. It's coming 384 divided by 3, 128%. It's the return annualized, right? So that's what I want to show you. So that amount you can recover. But as I show you, explain the healer you didn't cover. So the return can go both ways, right? And dividend tax, dividend are tax, yes. Only capital gain is not tax, correct. So dividends 15%, dividend 15%. But there are tax, but there is a tax you have to pay when you sell your shares and make a profit. No, when you are selling shares, no tax, only share taxation levy, right? That's the levy you have to pay. Yes, dividend tax, it is 15. You can, yeah. Yes, can hear you. Sorry, there's no capital gain or stock. Yeah, no capital gain, only dividend. Only dividend is so 15 by something like that. Yeah. So
Excuse
dividend,
me, sir.
yeah.
Sir, there was a word voting in front of the dividend. So in that the previous company that you showed, First Capitas,
Right.
does it mean that you get the dividend for only voting shares?
A First Capital only has voting.
Ah, right. Okay.
Only have voting.
Thank you, sir.
They only have voting. So First Capital only have voting. So that so then they have given the dividend on that. And for the other student, if you don't know the company, sometimes they have voting and non-voting. And so voting means you can have the voting right, like in parliament they have these members have the voting, so you can attend to the annual general meeting where you can they take a lot of decision, dividend decision, direct appointment letter. So we are a small shareholders, so we don't have much voting power, right? We have 1 or 2 shares, few shares, no, maybe 100,000 or whatever. So we can't change the decision. But we as a small shareholders, so we can participate. So better if you have shares, you attend and see the AGM, annual general meeting, where you can vote by agreeing or without agreeing, you can do whatever you want. And if you have a voting shares only, you can attend. If not, you can't attend. The non-voting. So famous these days, very famous voting are HNB. Right, HNB you can see this X, HNB.X. The X is the non-voting, right? X. The other one you can see N. N. So N is the voting, right? Share you can see most of the shares HNB finance only N. So N are voting. So that's the code. So code is differentiate, right?
No, both the voting shares and non-voting shares get the same dividend, is it?
Yes. Normally they give, but sometimes they can differentiate, but normally they give same dividend. Same dividend, but normally non-voting are cheaper. So HNB non-voting is, this is non-voting 308. HNB voting 399. Voting is, because you have voting, no? So voting share is little bit pricey, right? But there is some exception. So in one share in the market, anyone knows the non-voting is higher than the voting. NTB.
So other than the
Yeah, NTB,
voting
yes.
power, hello?
Yes, Mahisha.
Yes. Other than the voting power, is there any benefit for us to buying voting shares than the non-voting shares?
The voting right, there's any other benefit because already the price is higher. Because voting shares, the other investors, say some wanted to acquire a company, right? Say some acquisition going on, the major shareholder, someone is collecting shares, them to get the control of the company. So then each share value, because you to get the control, you need more than 51%, above 50%, right? Above 50%, you need to control the share company. So then, so when the controlling shareholder wanted to buy shares, so they want to get the voting right. So then the voting shares can go up in that kind of scenario. So that's the difference. And like banks, they have certain conditions especially banks, any single investor can own maximum 10%. Maximum 10%, except for some exceptions approved by central bank. So 10%. But voting, no, so so voting only 10%, but non-voting, no such thing. So non-voting you can exceed. So then when the company wanted to get higher capital, so when they are restriction on voting, they might go to non-voting. That's all, right?
So
Any
I,
questions? Yeah.
so I think under this bank shares, we can't buy more than 10%, I think, according to my knowledge.
Yes. Bank, you only less than 10%, but some previous arrangement, some people have more than 10. And so then they keep it, and Central Bank has given them to, you can reduce it over the period like that. So then they're supposed to reduce it. Like now Union Bank, the owner, they own more than something, right? You see the Union. Right, their owner is own 10%, 70%. So they have allowed. So at the end of Central Bank, the normal call is general thing is 10%, but in some scenarios they allow right. So if you see another example, I can show you even HNB also. You can see HNB, like the Ceylon Steel 9.98, Employee Provident Fund 9.71, all are 9%, less than 9. But the collectively, like this Harijavardhana connected companies, you can see Melfort Export 7.91, Stetson Export 6.85, and then Distillery is 3 points, so exceeding 10%. But since they have collectively, so they are collectively holding 17.83 in terms of number of share, but it has limited, but they own 17.83, but that limited to 10%. That limited to 10%, right?
I
It
think,
is.
sir, there is a difference between individuals and under company name. Under company name, they can buy more than 10%. For the individual, they can't buy, I think, it's less than 10%.
No, everyone is less than 10%.
Right.
Everyone is less than 10%, but so this is prior, sometime back this transaction happened. So they have given permission, but even though they hold 17.83 collectively, connected parties, not one party, you can see collectively they own, but voting right limit to 10%. That's what they say. But here you can see non-voting, no such. Now this Browns, that group is owning 45% of HNB. Right? So there is no connected link on that. Right? Now banks are all connected to each other. Now another one, say commercial. Commercial, you can see. Right? The DFCC sometime back they had 15%. Right? Now they have they reduced their exposure to 9.67. Right? But now in government, they own more than that. Example, this employee provident fund 7.34, and Sri Lanka insurance 5%, again 12%, and Sri Lanka insurance general fund 3.53, employee trust fund board 1 point something. In government collectively they can hold higher, because it was assumed that government is not a they are not in a not they don't willing to take the control kind of thing, right? So they have considered as a interconnected parties, government, but some banks, mostly government has higher stake collectively with the EPF, ETF, Bank of Ceylon, insurance, Sri Lanka insurance like that. But that exception was given to the government because it assumed that they are not in control. And then does that mean even if the shareholder is company not to give a maximum limit? Does that mean that the shareholder is a no, only for banks. The Deepali, so other things, other companies, they can own many. Only for banks and some plantation, they have that limit. From foreign shareholder limit for plantation also, but for other companies, no such a thing. So you can go for whatever Gamika Pera own, like even Dialogue. If you say Dialogue, 75% something owned by Dialogue Malaysia. So only rest of the things with the Sri Lankan public. So that is okay, perfectly okay, right?
And it's East West company.
Yeah, yes, he also recently purchased. Yeah, so now certain companies like even IOC, everything they own. So dividend thing, so tax thing is something like I would like to clarify for you from the beginning. See, advantage for you. So there is a question again. Are these companies interconnected? Next by Sport, Dassan Sport, yeah, all are same group. So these are some private company we can see. Melford Export is a private company. Stasson Export also a private company. And but this is a listed entity. All are connected. So they can have, so that you need to understand the bigger picture in the market, who are the connecting parties, right? Like that. Even taxing, now you have to understand like dividend, how we taxing is general rule is 15%. General rule is 15%. There are some exceptions. The first exception is a declaring company having the tax holiday. So they are BOI company and they are income tax free. So example, this was there for Dialogue. So they got the BOI license 15 years, the tax free. 15 years income tax free. So when you are now with this period is over, right? Now period is over. So you need to look for those kind of things. So now no longer. So that period is over. Now they are dividend is tax. When your corporate tax is tax free, your dividend also tax free, right? That's the first scenario. Second scenario is, so you have a company A, B, C, right? And then say first, now B declare dividend. So you are a shareholder of B. So B owned by 80% A. So B declare dividend. So then when B declaring dividend, 15% is deducted. So then A also now B declare 100. The withholding is 15. A receive 85. Withholding deducted dividend. Now B also listed entity, A also listed entity. Now A is declaring dividend. Using the dividend received 85. Okay. We call paying dividend out of the dividend received. So A not using his money. So A used the money got from B, 85. So then 85 A declare from there as a their dividend. So which is we call dividend declared out of dividend received, which is tax free. Because to avoid the double tax, uh, if the, to avoid the double tax, that provision is there. So only one tax. So if you are now, there are many companies now. If you see John Case Holding is declaring dividend. Majority of funds from their subsidiary companies. So when John Case is declaring dividend, they definitely using the subsidiary company dividend also. Any component, if you declare, you have to declare that, say, out of whatever amount we are declaring from the dividend received from. So then that amount is tax free. That 15% not deducted, right? Is an advantage due to have the group companies, right? See, another thing is very important thing is this 15% is maximum tax for an individual. So dividend is no more taxing. The companies is different. For you guys, so final tax. So which is dividend when whether you are a shareholder of B or A, dividend received out or dividend paid or brand new dividend, whatever. So when so dividend is already assumed that tax paid. So the dividend is not part of your accessible income, right? So tax free. The other advantage is dividend. So if say 15% you pay, no, so this is the maximum tax, no further tax. So that is good, very advantage than FD. So FD, you deduct 10% withholding. So some people saying, so FDs are lesser tax because it's only deduct 10%, dividend deduction is 15, right? But you can optimize by investing in good dividend paying group because they always declare on dividend received, right? And FD, even though you assume 10% is not your final tax, whereas dividend 15%, I mean deduction is your final tax. But with FD is, it will be added to your total income tax and you need to work out and see. So you may be having the salaries. So salaries you have 3 million. Then you have say 5 million. Then interest income you have 2 million. So dividend you have already 15% paid, no tax. So dividend is not part of your taxable income. So you have 7 million income. So dividend, so the interest, this 2 million you have already paid 10%. So tax was 200,000. You got income 1.8 million. But you need to gross up and take it here, 2 million, right? And then your total income 7 million. So after out of that, you can deduct. So you can deduct like the tax-free revenue. So tax-free amount is 1.8 million. So you have 5.2. That's going to be your tax. So how this tax? The first 1 million. First 1 million. Tax as 6%. So that is your tax is right, 1 million into 6%. 60,000. So then next next 1.5, 18%. So that is next 500,000. Yeah, next 500,000 at 18%. So that is
90,000.
So next slab is 12%, I think.
No, 12% tax, now the new one is no longer there. 12% is 25, 24, 5. 5, 6 onwards, 12% they remove. Because that's why they deduct, they remove now, they enhance now minimum 100,000 to 150 limit when they are increasing the base. Earlier, the tax free was 1.2 million tax free. So they have increased it, right? And when they are increasing, they omit that's the trick they have done. So they remove the 12% bracket. So then after that, you have the next bracket is next 500,000. Like to 18 to 84%, right? 24%. So like that is gone. How much? 500,000 into 24. 120,000.
120,000.
Yeah. So then you have another 500,000 at 30%. So that one, how much? 500,000 into 30.
150,000.
150. Then
The total
another,
tax is 600,000.
okay, 36. So how much? 5.2, no? 1, 1.5, 2, 2.5, 3, right? So 500,000, total tax, 500,000 into 36, 180. So how much total? You have 180 plus 150 plus 120 plus 9 plus 60. 519. And the balance how much? So balance left is you have now covered like so this one is no longer there. We can say 1.5 to 2.5. To 2.5 this amount. So 2.5 up to 2.5 you have this amount.
600K.
Yeah. So then you have your 5.2 now your income. So 5.2 you minus 2.5 you have already taken. How much? No, 1.5 to 2.5. So 2.5 you have taken already. So balance amount 2.7. 2.7 at 36%. 2.7 into 36. How much? 907.
972,000.
972, right?
Yes.
Yeah. So then your total tax is 972 plus 150. So your total tax is 972 plus 150 plus 120 plus 9 plus 60. 1.3 or something. So what? No, this is your tax payable. Now out of that, you can see your interest income, then you paid here no dividend. So interest, so 200 withholding you have already paid. That amount they allow you to deduct. So then your balance is something here. You can see even though they deduct 10%, your final tax may be at this rate. So you are paying actually progressively 36%. Right? You are paying actually yeah, some total tax is 1,003. Okay, some calculation you can see. I want to highlight is 36% you are progressively pay. Apparently, but you think that 10% is interest is cheaper. No. So interest is upfront. So when you work out, you can see you are paying like 6, 18, 20, 24 like that. And finally, they allow you to deduct the 10% you pay. Technically, the interest taxing at finally some component at 36%. right? That you need to understand. But dividend, the share, so far, I don't know what will happen in the next budget. The share price appreciation, capital gain tax free, and the dividend is maximum 50, but interest can go up to 36. So that's the highlight I want to highlight that. And then, but the dividend, if you receive it from the out of dividend received, so then tax free. Yeah, okay. I hope everyone understood. Whoever, I think there are some tax expert also. Thank you. So, so your feedback, and so you need to understand this. You need to understand. So when you are doing investment, so very essential that you have to understand tax, especially in Sri Lanka, right? Because we have a lot of taxes. One thing is sure, we will remain to have more taxes. So you have to, your investment has to be tax efficient. So then you have to always look for maximizing the tax deducted return, not the gross return. Right? Because taxation doing a major role in Sri Lanka that you have to understand, right?
So just to clarify, in your previous example, you told about when the B company issues 100 dividend, and then A company, the B or A company owns B company, so the A also receives some of the dividends, and then since the tax is 15%, the B company receives 85%.
Right.
Sorry, 85 tax. Then if the B company is issuing the dividends using that, if let's say the B company, sorry, the A company issues 50 dividend, dividend per share 50. So that 50 that they won't deduct the 15% again, right?
No, then A received 85, no? So
Yeah.
out of if they are declaring dividend, say 50 out of 85, so this is already
Okay.
they withholding paid, because out of
Yeah.
the 85 they received are having paid withholding here, B paid.
Yeah.
So if you are
Yeah.
declaring 50, already withholding deducted one, so this won't tax again, tax free.
So if I own the both companies,
Yeah.
A and B, what will I receive?
So
A,
you and here, so in the B you receive withholding deducted dividend, A no deduction.
right, okay.
But
That's
for you no issue, because both even though deducted or not deducted, for you that's the final tax. So it's not a part,
right.
okay, not a part of your assessable income.
Nice.
Because for the individual, dividend tax is a final tax, whether deducted or not deducted. Not now when the company is deducting dividend, so they give you dividend warrant. So that's the mandatory. So probably they may post it to you or they send it to your email. With the dividend warrant, they specifically mention whether this dividend is subject to tax or not. So in the it's not subject to that tax, they say, so this component, sometimes they can say, like, so out of they declare 80, they say 50 from dividend received. No withholding apply. So balance 30, they 15% they are deduct. So they give you that. They explain that dividend warrant in the dividend warrant, right? You need to keep that dividend warrant.
Right. Clear,
Okay.
sir. Thank you.
So any questions or so far on any suggestions? So far, are we good? Yeah. So I want to cover that part also. So we were on any questions so far? Anyone? Like,
So I have a question regarding the 10% limit on the bank. I checked the distillery's financial report. I found like the Milford exports and Tyson exports are having 3.2 and 0.05 percentage shares on distilleries respectively.
yeah.
So in that case, even though there are a small number of shares, why they are limited collectively to 10%? And is this because the same people are
No,
in
in
the
the only bank, only this deduction. The bank, central bank has said that anyone can own maximum 10% of the voting. Only bank. So distillery is no issue. Distillery is a bank, not a bank, no. So distilleries, their owners can have around 90% or whatever.
oh, okay.
Okay. So this 10% is limited to only for bank. For other,
Wait,
someone earlier asked, the other companies, no such limitation.
those three are collectively limited, right? For
Yeah.
10%. That's
Because
why
now,
yeah.
now it's a example, even you are buying, say, you are buying, say, Sampath shares, using, Sampath also has, I think, valuable one, they have, I think, more than 15 or something, so they had to eventually reduce. So valuable one, I think, Sampath also has more than that. Don't know that they have sold recently. So you can't bypass the law. Right? Law say maximum 10. You can see valuable one, they have 15. So they have given the maybe some timeline, they will reduce it. As you can see, the Platinum investment subsequent all guys less than 10. The Silver 10%. Employee Provident Fund 10%. Right? They keep that amount. So the maybe valuable one, maybe they have found that very, very old days. So they have given this one. So they have to gradually remove. So they have given some plan. Now, to bypass the law, like example, you have you are buying from your own share, your own name, and then you have another company, say another double V or something, right? VV Private Limited. Then you have your mother also buying like that. So in all three are connected. So having connected thing, you can bypass. So if you are all connected parties can jointly own maximum 10, less than 10. So that's the law. So this in HND, these guys, they own this one long time ago, before this rule came. Before this 10% rule came, they had this investment. So then say at the time of rule came, they already have. So then some flexibility was given to them. But since they own collectively 17%, it was reduced to 10. They own 17%. When they get declared dividend, they get 17% of the dividend. But in the voting, it is limited to 10. That's the only limit. So I am repeating, only the bank this limit, the other companies no. But you should have this public ownership. The public share has to be there. That minimum public fault has to be there. So when you are at that 10%, 7.5%, then certain rules are there for main board. These are separately applicable. But the limit is only for banks. Okay. Right, so then we'll move on even share market. I explain it. I took you to to explain some different scenarios. Also, I hope you understand. Anyone couldn't understand? Anyone something new and you couldn't understand, right? If you couldn't, so don't worry. If you can ask. If not, I will. Anyway, I will explain later. Also, anyone couldn't understand? Any? I hope everyone is on same page and no any issue. Okay. So then we move on. The Colombo Stock Exchange. So Colombo Stock Exchange is a licensed operator in Sri Lanka. They have received the license from Securities and Exchange Commission, SEC. That's the regulator, right? So they are giving license to Colombo Stock Exchange to acting as a market infrastructure provider, CIPA. So they are the market operator. So they are acting as a market operator, right? And so right now in Sri Lanka, only one license was given. But some countries like now in Singapore, only one exchange. Malaysia, one exchange. US, we have two, three exchanges. The London, UK, only one. Australia, only one. And like India, we have two, right? So they have mainly two exchanges we call NSE, National Stock Exchange, and the Bombay Stock Exchange. The Bombay Stock Exchange is Asia's oldest one. So like similar to the Colombo Stock Exchange, they have the Bombay Stock Exchange. So National Stock Exchange we call NAC. So apparently they have established little later, right? So you have two exchanges there, but some countries mainly one exchange. Sri Lanka also one exchange. And here, so this is like the daily market report. So I got from NDB stockbrokers. So I will be using different material of various stockbrokers, but I'm not recommending or whatever. So only for the education purpose, you to get understand. So this is the market in summary last Friday. Last Friday, you can see market turnover here. So that the value of the purchases, right? Purchases. Normally the single side. So when you buy, there's always seller. So this is always turnover is a one side. One side we show the corresponding amount available. If you buy, someone has to sell. So then the both. But here only we show the one side of. Okay. And the turnover 7.39 billion. So ASPI, that's the all share price index that show the performance of all the shares, all 290 companies. And so that index has gone up by nearly 1% on that day. So daily 1%, right? So that show the performance of all the shares. Then S&P SL20, so the CSE has partners with S&P, Standard & Poor, the global index provider. And so this one, the branded index. And the computation, everything done by them. So that is top 20 in terms of volume and the in terms of size. The top 20 Sri Lankan companies. So that one also 0.51%, half a percent has gone up. And these are the shares you can see every day there can be certain shares can go up, certain shares can come down. So these are the top 5. Now you need to learn this code, right? Every share has a code. Now CINS means selling co-insurance. Dial means dialogue. Sankar Finance, Rich, John Case Holding, Cooperatives. So RCL means Royal Ceramic, Valuable One, Ceylon Theatres, right? Doc means Dockyard, Colombo Dockyard. So you can see selling co-insurance has gone up by 24 rupees that day. Right? No, that's the percentage, actually percentage, positive and negative contributors to SPI. So they have contributed 24% turnover for the positive contributors to selling co-insurance. These are the guys, the negative contributors, right? But overall average 0.95 positive. And foreign inflows, you can see foreign inflows came to HNB Dialogue, the foreign investors, some outflow. Tokyo, some outflow. So that you need to learn that. You can see on that day, even though index has gone up by 1%, 155 companies' prices went up, 77 companies' prices came down, but average positive. Foreign participants, domestic 97, foreign 3, right? Year to date, domestic 94, foreign investors 6%. Top contributors to the turnover, the main LVF, PLR, Prime Land, KHL, Keys Hotel, HNB. So those are the bigger contributors, right? So this is the market summary. And this is like 10-50 last 12 years market performance. You can see in 23 market or something around 7,000 or something, right? So now it has gone to 21,000. You can see over the period, say 21,000 minus 7,000 divided by 7, like 14 divided by 7, like 200. Right, 200% market has gone up from here to there, right? Here to there. So that is you have to see that's what I said. Over the period, you can see up and down. So ups, down, up, down, but the momentum is so where you start, longer term, where you stop. So that you need to, that's what I explained previously also. So momentum is growth. In the short term, you can have many up and down, right? So you have to be patient. And yeah, that's why the importance of having long-term investment, right? If you have invested in good company during the long term, they perform well, right? So share investment, this is from last year, 1 year, you can see like around 12,000. Right now, 21,000. 1 year return is 21,000 minus 12 divided by 12. How much? 21 minus 12, 9 divided by 12. So 1 year return is 75%. So it's a tax free, right? If now maybe some of you would have benefit. I think there are some students who have already invested. So you probably might came to the market prior to that 1 year period. So then your return is almost, this is the market as a whole, but your particular shares would have performed much better than the individual shares would have performed better. This is as a market as a whole, because there can be negative and there can be positive. So this is the average. So that's the power of market. You have to learn how when to enter, when to exit in short term, if you are a trader. But if you are a long-term investor, you have to invest on good, solid companies. So then they will remain. The long case remain for more than 100 years, right? So this is like last few days, last 7 days. You can see total turnover almost around 5, 6, 7 billion, very healthy turnover. And companies traded, even though we have 290, 270 companies traded, some companies don't trade. So market capitalization, this is the size of the market, right? Size of the market. And here, so more importantly, I think you will learn when you are going on fundamentals and ratios analysis also. Don't know whether you have already discussed in the fundamental lecture. Where the market P is a price divided by earnings, so which is very low. Which is very low. Right, so 9.81 means the market is still undervalued, right? In terms of earnings, compared to earning multiple is very low, right? If you see some developed Indian market PE, right? You can see Indian market around 21 times. So they are comparatively, we can say, expensive compared to us, right? So that market and the foreigners, I think there are some students who are coming, who are investing in other market. If you are if you are an international investor, you have to see which market are cheaper, which market are expensive. Now compared to Indian market, Sri Lankan market is cheaper. Why our market fee is 9.84? We are cheaper, right, compared to Indian market. Say market, say Hong Kong, someone from Hong Kong market. SGX or it's something 10 or something, right? So comparatively same as here. Ten point something, right? Compared to Sri Lanka, very much same level. I think their market came down, right? With some political or Chinese something, market came down.
It was
So
actually the last 3 years going, we are not doing well.
yeah, I think they were doing very well. I think with some political things, the market came down because Hong Kong is Chinese global face. So all these Chinese companies are listed in Hong Kong. So that's their global gate. Foreign investors normally they come to Hong Kong. All these Chinese state companies who are state companies in China, they listed in Hong Kong. So that's their global base. So because some global investor, they don't invest in China, but they invest in Hong Kong. But there are some turmoil last few years, yeah. And otherwise they were in US. I don't know, I'm just checking this AI. Probably these numbers can go little bit vary. You can have some comparative idea. If you are a global investors, you have to see global, right? Yeah, around 27. So very high. So that's the normal momentum. The stock market are price to earning, like compared to that means simply 27 means the price is 27 times higher than earning. Price is 27 times higher than earning. In Sri Lanka, price is only 9 times higher. So that's how you can understand. And but somewhere here. But then you can see in our peak, our recent peak was something like 21, where market went up by 80, 60. So very healthy turnover that time also PE around 13 something. So our PE is, even though we are now better than 21, comparatively same in terms of performance, but our PE is less than 21, right? Because our this period compared to 21, now the company's earnings are higher. So comparatively compared to earnings, price are low. So that's how you interpret. So that means there's a potential to go up, right? So for only for that angle, I think when the fundamental analysis you would have learned, you will be learning. So you have to analyze market from different point of view. So P is a one aspect, right? So comparatively, you can see market has a potential to go. So I'm not recommending anything, but only from this isolation, if you isolate P and C, the market has a potential. But you have to see combined. So that's where the risk-taking ability comes. You have to check with many angles. So when you complete this course by 9 month time, so you will learn those things. So we will learn those things in bigger way. So one aspect is market P, where we will discuss that very extensively in the financial statement analysis also in the next semester. The other one is, so with that, before going to other one, so I want to show you the market classification also. In globally, market classify the benefit for the benefit of global students, like international one. We call MSCI market classification, right? So you can see the stock market globally classified into these three areas. The globally they invested, so they diversify among these three markets. You have developed market, emerging market, and frontier market. So we are a frontier market guy. So some global investors, they don't invest in frontier because some high risk. So they are only invest on developed market. So but depend on your objectives. Depend on your objective. So you take that ability, right? you take that ability. And you can see developed market. So all developed market, America, USA, and Canada, you have all Europeans here, and Asia Pacific, Australia, Hong Kong, Japan, New Zealand. So Australian market is a developed market. Right? When you are sorry, Hong Kong is a developed. So you are comparable market are these guys. You return and all, right? Because you are in different bracket. And when you are looking at emerging frontier, some funds they are not investing on develop. So they are only on frontier. Some are on emergence. Some are on develop. Some are on all three. That depend on their objective, right? And emerging guys are in Asia Pacific, China, India, Indonesia, Korea, Malaysia, Thailand. Those are the emerging guys. Now, in the frontier market, guy, the foreign investor looking at frontier market, so then we have to compete in Asia Pacific. These guys, Pakistan, Bangladesh, Sri Lanka, Vietnam. So we have to compete to attract foreign investment. So that's why we have to we need to satisfy their objective, right? So then we have like advanced frontier market. So frontier, we have some advanced guys also. Asia Pacific, no. In the Middle East and East Europe, Estonia, Latvia, Lithuania, Romania, Slovenia. Those guys are advanced frontier market. And there are some markets standalone, no classification, right? Asia Pacific, no. But you have Argentina, Jamaica, Panama, Trinidad and Tobago. Those guys are standalone market, right? So that's the global classification. So when the investor looking at frontier market, so they compare these when they're looking at Asia Pacific, so they compare these market and take a decision where to invest, right? So there is I think Deepal is asking, can you explain the market indexes to us? It's a little more, yes. The detail we'll discuss later. So we have a separate slide, Deepali, so please bear with me. So we will have a separate session on that. Yeah. Okay. So in summary for right now, you can see the market indexes. The ASPI, all share price index, is to measure the performance of all the shares in the market, right? So that you can track the performance of all the shares. And the S&P 20 is only most liquid than the bigger 20 companies in the market. So that's normally those two indexes, we measure the performance of the market. But in every market, you have a ASPI. And the S&P is the Sri Lankan branded most liquid index. So that similar to in India, in the NSA, you have Nifty 50, right? So then in Bombay, you have Sensex. Sensex is the Bombay sensitive, this most liquid index, right? Do we have different Dow Jones, right? Different indexes. Right, and the other one is price to book value. So that means compared to cost, now market is 1.4. The market has all more than the cost. Market, we can say overvalue compared to the cost. Okay. So now book value is with the company book value is any share book value is 1, market value is 1.4. Not everyone, this is average, right? This is average. Now some banks still undervalue. So their market price is less than the cost. But some companies market value is higher than the cost. This is average value. So dividend yield 2.3. So that's the dividend yield. You can compare with interest rate, where if the FD you are getting 7%, but dividend yield is 2.3 average. But some shares give you higher dividend. Right? Some shares give you higher dividend. I will show you when you move on, some shares give you like dividend 40%. Right? Some are give higher dividend, but average 2.3. So this is like index performance. As you can see, all share price index, year to date as at last Friday, 31.69, not annualized, like year to date, right? So if you annualize, you divided by 7 months and into annualized, you can see like nearly 60-70% upward, right? In S&P, 25%. And monthly wise, you can see Jan to August, we had good January, February, but some drawback here. Anyone see why there was a negative in that period? Any guess?
Because less demand.
Any other answer?
Trump tariff.
Yeah, Trump tariff had uncertainty. That's why. So he imposed first April or something because of the uncertainty. That issue came. So after that, uncertainty was cleared and right, lot of clarity came subsequently. So you can see market react for the news. So you can believe news, you can foresee. So if you by the time here you see, if you can foresee, etc. Even Trump is putting that one, it may not live, not materialize, or maybe the impact is lower than expected. So then you can enter lower point. If you wait and see, if you wait now, you are entering at higher point. So if you enter here, you have a more opportunity to earn lot because you enter to the market where the market was low, right? So those are the things. That's why I say risk and return. If you believe, you need to analyze Trump and say, okay, he says something and do something. So even though he is imposing 78 or 80% tax, later he will reduce. If you believe that, you would have purchased this time. Okay. So market is like that. So this is annualized. You can see last few years, you can see give me a minute here. Right, you can see here 1% during the Easter attack, right? 1%. And then you can see 10%, 21 during the COVID and prior to the economic crisis around 80%, right? Then we have then the economic crisis 30% down. Then last 3 years you can see we are on green. So average wise you can see so average return is like you can see this year so far 31. How much? 31 plus 49, 25, then minus 30, then plus 80, then plus 10. If you avoid the 9, like last 5 years, 165 divided by 5, around 30, 33% something average. That's the market performance. There's a question, how does one do a comparison between different global indexes to understand their comparative performance? Yeah, you have to see the performance now. Yeah. So next slide, I will show you. So this is the global 24 total annual. Now Karachi was the best performing market. 70%, and Sri Lanka was second in our region, right? Market performance, so you can see 49 in the regional. So why Karachi? Any similarity between the Karachi and Sri Lanka, Pakistan and Sri Lanka last year? Anyone? Any similarities? We had some similar characters,
We
characteristics.
both are under IMF.
Yeah,
That's
both,
correct.
correct. Both are under IMF. So that's why now it shows that you have to have this the all-round knowledge, right? So if you have this all-round knowledge, it will help you to take investment decision, right? So IMF thing, so economics is very important. Some of you may be not done economics in your ISA because if you are different discipline, if you are done mathematics or bioscience, so you have not done economics, right? But in your this wealth maximizing journey, you should know some sort of economics because you can't separate our day-to-day life. We can't speak about day-to-day life without this talking about economics. So that is very important. It's unfortunate that now in our syllabus, whole syllabus and all, only you learn part of the thing. You will not learn everything, but ideally should have been there some sort of a listing because as I said very beginning, you may come from different discipline, but your success depend on how the economy is performing. Even you are a best guy, brilliant mind, whoever, if you are not migrated, if you are living here, your fortune will depend on how the economy is working. So economics is subject. Basically, economics we started saying how you manage unlimited wants with limited resources. So in the world, we have limited resources, but our wants are unlimited. So economics is actually the science, the subject. It tell you how you manage unlimited wants with limited resources. So that's the subject, right? This subject you can do from ordinary level to advanced level to university, MBA, PhD, whatever. So it is vast subject. But you should know the things you have to learn. What's the GDP, the gross domestic product, what's our economic rate, what our economies, whether going or not going, how the government income is come, how the government run the country, what are the government revenue, what are the government expenses, how they cover the expenses, why they want taxes, whether tax income is going up or going down. So whether by government are they getting loans, everything is matter to you, right? Because you can't isolate. So government does many things. So their action has an impact to us, has an impact to our life, that as well as interest rate, as well as the market. Okay. So when you are comparing, you can see this is how the last year, total full year, Sri Lanka was best performance in the region. So some banks like Taiwan, Hong Kong, and this I think some minus DSCs, DSCs, Bangladesh, set is Thailand, right? Anything you can know? What is come to your mind? Bangladesh. Anything happened to them last year?
The political upheaval.
Correct. Correct. Yeah, political unrest, right? No, that will give you a good thing. That will give you a good learning. Political stability is key to the market success. Irrespective of company performance, you forget about you forget the PE, the book value, or like the technical analysis, market analysis, whatever analysis you forget. The political is the key. Any market to perform. Investors like stability. Any
What
disability.
does, sorry,
Yeah.
what does daily return mean here?
So daily return means that this is last day. So that December last day returns. You just forget. So this is the annual return. Okay. So Bangladesh, their political issue. Thailand also has some issue, right? So Korea also has some issues. So their prime minister resigned and someone on jail and right, lot of issue. And you can see Sri Lanka and Pakistan key was mainly the IMF agreement. So assessing agreement, IMF agreement, right? And this is so far in 25, other market is again regional. you can see the best guys are Vietnam. So they are doing well because they have done good deal with Trump. So they have lower taxation and a lot of economies growing. Chinese investments are there, and more than that, the market is bigger. They have around 60 million or something population. The market is bigger. Then the Kospi, the Korean market, right? And then you have CSC third performance, Karachi again, and send the Hong Kong, right? Like that again, Thailand having issues, again political issues, right? Their prime minister resign and all, and they are on war with Cambodia, right? I think now it's over, but they had something. So those are things. Those are things. We can see we can Korean see the Greece, the profit market, Poland, South Korea over 30%, Austria, Spain, Vietnam 31, China, United States, Hong Kong again, they are reported loss. Turkey, Japan, right? Global countries, the MSCI all country world index rose by 10. That I saw you, remember I show you some global classification, entire world index by 10%. Right? So in these topics is something you need to master it. So you to understand, you to success in stock market. Now I think you have taken the very good step, having taken decision to follow this one. Even though you are paying and you from your side you have some investment, right? You are paying around some amount, but the knowledge you get is a lifelong. It's a lifelong knowledge you get. So that if you done this amount at your 20 or 30, up to the 2030, so this investment, the amount you pay for to follow this course will help you in your rest of the life. So the long-term investment, the benefit will come to you, right? So then share investment, you will learn interest rate, inflation, exchange, economic growth, taxation. I think some tax part I cover, right? And company performance, financial statement analysis. Now these areas you cover during this course, right? Some financial statement next semester, company performance, the economic area through fundamental analysis, as well as economic subject you have, right? And accounting you have financial statement analysis, and the accounting subject you do this semester, right? Lot of things you learn. So other areas, no, I am actually connecting. My job is to connect you to the other subject. That's why we started. Ideally, we have started last week, and so I am actually connecting, and give then the further details. You will be learning in those other connected subject, right? So you have to somehow master. Even though you see we are not studying, those are not proper science. So if you need to have good finance knowledge, good economic knowledge, is not essential thing. Now you need to have the targeted knowledge only to relevant to that investment, right? Because the company to perform, the companies, everything come under government, right? Government is doing a bigger role. So political stability is key into any country's success. You can't if you have political turmoil, and you can't have the good business environment. So those are conflicting. Either you have political unrest or you have a company performance. So those are the very key. Anything to political instability will have an impact to the market that you need to understand, right? And then so market is operating under based on the interest rate, inflation, exchange. Those are things companies won't control. Those controlled by the government, central bank, and market forces. So you and me can't change or control these things. So a market is reacting or responding to these numbers. You have to be familiar. Okay. So familiar means you have to have an ability to foresee, because price you pay for share to buy today, that price reflect future, because price already reacted to the past event. Always stock price reflect the future earning ability, how company perform in future. That's why you pay higher amount. So you have to see these parameters, any impact to the company performance. If there's any impact, future price will come down. If you are paying now higher price, it's a loss for you. You are buying at higher price. Eventually, the share price will come down in future due to impact of these items. So that's why very essential that you should foresee, right? So fundamental analysis in share market, you can do various technique to study. You can do fundamental analysis. You can do, some are investing on fundamentals. Some are investing on technical based on chart. Some are investing on both. Some are investing on the gut feeling. When they woke up in the morning, they say, okay, this company has potential. There are investors like that. Right now, no technical analysis couldn't predict the charts, couldn't predict the Trump tax. Right? It couldn't predict it. So the technical based on the volume, volatility, so they give you the undervalue or overvalue this thing. So the sudden thing, so they can't predict the bomb blast. They can't predict the tsunami, right? Those political turmoil, they can't predict. So based on the volume, that's the technical. But that will give you overvalue, undervalue based on the momentum. But they can't predict these uncertain things. Technical also, now you can do higher value, lower value, the economic stuff, everything. The fundamental can decide it, right? But certain limitation, like compared to technical, fundamental can't give that full thing. But that's why you need to have blend of thing, and you should thorough on this area. If you more the knowledge, if you have more knowledge, so you are a more complete investor. So then you can get best out of that compared to another investor. Okay. Any questions so far? Any?
So has the Sri Lanka ever surpassed this P ratio of 10? Is there any like benchmark that we can find?
No, as at Friday, this one, 9.81.
Yes, like what I'm asking is like, is there a historical high
Yeah,
like
around,
before
I said
this?
in 21, 21, it was around 13 point something. It went to 30.
Oh,
Okay. Any other questions? Okay. Hope everyone good. So everything you understood, right? So we are moving into fantastic ray. So very essential that you know these three areas: the interest rate, inflation rate, and the exchange rate. It's very key, right? Now, you see the interest, you can see here during the economic crisis, the interest rate went up. So treasury bill rate went up to around 35, right? And then the bank deposit went up to 30. Right? Something a period like the peak was something here. You need to understand one thing. So previously, what we were doing, so the government, previous governments, all the governments, they were doing like if you have an election here, so like 1.5 years, 2 years prior to that, they start working and they will bring down the interest, market interest. They will bring down the interest, right? So when you have low interest, we say price for money is cheaper or money is cheap. Why? People can borrow. When the interest rate is lower, people borrow. They import vehicle, so they borrow and they buy houses, properties, they renovate houses, right? If you have a old sofa set, you replace with new sofa set. So what happens when the interest rate is low, the access to finance is high, the economic activities go up, right? And essentially, the economic activities enhance. When more economic activities means the good performance for companies. And then two aspects. When the interest rate come down, people increase their consumption. As a result, the company's top line, the revenue will go up. When your revenue is going up, they increase the markup also, right? So then the company profitability go up when the interest rate come down. The other scenario is most of Sri Lankan companies are highly borrowed. So they borrow from the market. So as ordinary shareholders, as you are buying shares, no, then you are actually providing capital. But companies, so they have a so the capital they get from two scenarios. You get from equity, debt. If you are buying shares, you are part of this. But companies get capital from debt also. They get bank loan, debentures, a lot of things. So then you have the total capital, right? Right. So they have total capital. We call that is weighted. Let me share some. right? You can see they take equity and debt. So normally the cost of debt is you have we call capital structure, and you finally come up with weighted average cost of capital. So from the company's point of view, right? From the company's point of view, so when you are investing means you are investing in the company, they have to give you return, right? In Sri Lankan companies, mainly they try to give you the return through the price appreciation. You get the return from the market. But there's a cost to them. The cost is dividend. But some companies not declaring dividend, some are giving you a smaller dividend. But they try to compensate you the opportunity cost having invested your money through price appreciation. So when the company doing well, the price go up. So as an investor, you are getting the price appreciation. You can buy low and sell and earn money. Or alternatively, dividend. So dividend part is we call cost of equity. And the cost of debt is the loan interest you pay. Then proportionately you get the cost of debt and the equity. So the weighted average cost of capital is, this example is like 10.5 based on the volume you have. Every company task is to lower the cost of capital, right? Then only they can earn a lot. Right? So the capital composition, how much you put in debt, how much you put it in the equity is depend on up to the management. Some if your debt capital is more than the equity, we call highly geared. Highly geared. In those scenarios, right? In those scenarios, when your debt is high, actually the company benefit is going to the debt holders, not for you. Because now example, now I will show you the company. Say Odell. You see the latest quarter. You can see a company has made a loss of 1 billion, right? But you can see here, so no dividend. No dividend can be paid because you have a huge loss, right? But finance cost is 479 million, right? You have operating loss of 536. Same amount you have finance cost. That's why profit has the loss is double. Here the debt providers getting their share. But that's what happens when your debt is high. Debt holders are earning. So you will get some return after servicing debt. You can see by happen their debt are higher. You can see equity is even minus. Because losses are gone, equity is minus. So there's no book value. Net asset per share is 5.99 minus. But company has a market value. What's the market value? 11.80. That's the stock market. Company cost is minus, but market value is positive. So investors see some turnaround. That's why they have like that. But the important thing what we are learning here, you can see that debt equity is minus. See the loan. So they have interest bearing money 11 billion. And here around 8 billion, right? Total around 19 billion is the loan. So that is more than equity. So obviously the debt holders are making gain. So they are earning. So as a equity holder, you are penalizing because company is earning enjoyed by the debt. So that you need to mindful, right? That you need to mindful.
Just to ask one question.
Yeah.
Now, when Odell, same company, then they don't have any book value, and I think I'm understanding correct, they don't have any asset also. So
They have
they have.
their head office, the main they own it that the land and building. So in Colombo,
That-
7 town hall, yeah.
Oh, Because otherwise the whoever financing, they in
Yeah.
case they bankruptcy, I'm not sure how they're going to recover that.
No, they would have mortgage it. You can see. So balance sheet. So property and plant and equipment, right? 3.75 million is that's their property. And and you can see they have done some revaluation. So 4 billion. So that means the land, the properties, their own one, they have revalued. So then now you can see the property value went up now recently. So with that, another revaluation things can come. That's why you need to have like right here they say Colombo residential land prices rise 14.4. So when the land prices increase, the companies can do revaluation. So then the revaluation reserve may go up. So then the negativity can come down. Right. So then the reserve they can book. So those are things they can do. So a lot of companies you can see revaluation. They are companies with properties, their valuation may go down. Their property value go up. So that till we call the revaluation reserve. So nothing go to the P&L, income statement, nothing, but their reserve will go up. So with that, what happened? Their book value can go up when your land is 100 million, say 15% gone up. So that is 115. Your properties has gone up. So your book value will go up. So essentially now some companies you see book value is market value is more than the book value. Now once this next year come, you can see book value has gone up. So then market value is low. That's how the market work, right? Then price can go up further, right? So that's why you need a lot of analysis to understand overall. So I will, much as possible, I will explain. The other lecturers also will do the same. But then you have to maximize, what we were discussing, you have to maximize so the benefit and the lower the cost of equity, right? So then only when your cost structure is low, so then this you can maximize your profit, right? So we were discussing on that. And when the interest rate come down, as I said, the finance cost come down, right? Because most of the companies are highly geared now. So they are paying huge interest expenses in every P&L. Example, I saw you how that was with Odette. So when the interest rate come down, their finance costs also come down. So interest rate is a two advantage. When the interest coming down, their top line going up because consumption going up. Then the other angle is their finance costs come down because now the interest rate is lower. So as a result, because of these two actions, one time your top line is going up, other one is expenses coming down. As a result, your profit go up. When your profit go up, what happens? Market price go up. The share price can go up. The company can, when your profit go up, you can give you higher dividend. It's a lot of advantages. Right. So this one I can easily explain with single. Right. So let me take you to that one. So when the interest rate were higher like 23, you can see we'll take you can see that quarter. So 9 month. We'll take 12 month. Say 23 March. Uh, 12 month. Yeah, you can see here. Profit is very low. Profit is very low, right? 220. Why? Interest rate went up. 23 March here. So we are covering this period. Interest rate was peak, right? Then you can see your revenue also came down. Revenue also came down. Mainly the interest rate is higher. The consumption of the public came down. Consumers can't spend because economic crisis one hand, the other hand interest rate very high. The economic activities came down. You can see, can you see the finance cost? So Singapore also very much highly leveraged company, right? You can see what happened to the finance cost. Last year 2 billion, now 6 billion finance cost. Why? Interest rate went up. But the same thing I explained. Obviously resulting lower profit. Okay. So now let's see the next year. So then the next year, little bit easing. Interest rate little bit easing. You can see 31st March 24 against worse, right? 24. Somewhere here, things are improving, but I think the interest rate is coming down, but public, but interest rate not, it a decreasing trend, but not the low, right? You can see they made losses. They made losses. Okay. Now say 24 March. Yeah. 24 March 297. See the share price of the company. Last traded price 16.10. Last year when they were 15, 16. Even last year this profit, now losses, like share price slightly have gone up. Even the company making losses, share price has gone up. That's what you need to understand, the power of interest rate. So you have to understand what are the parameters will help each and every company to perform, each and every sector to perform. So I isolated Singer, no? So key driver for Singer is interest rate, right? So I will further thing you can learn from the annual report itself. So I will discuss those things when you are meeting next time in the next semester in the financial statement analysis. For time being, you can see what I explained. When the interest rate higher, public consumption come down, then your top line is reducing, and the other hand, your interest is going up, your finance cost is higher, obviously profit. So then they made losses. But some investors, so they know when the interest rate is coming down, when you see the first sign of interest rate coming down, they know by analyzing this company, when the interest rate is coming down, the company will bounce back. That's why share price has gone up, even that loss situation. Right? We can check that if you go to the trading view. You can see in March 24 March. Right, you can see share price something 24 February, March. How much? 13.6. Right, 13.6. Right, but investors, so when they know the secret of interest rate. When you see interest rate is continues to come down, so they invest. You can see, you have seen the share price started to go down, go up, right? From that point onward, you can see share price starting to go up from 15, 12, 15 level, right? Then now it has gone to how much? 67. By 1 year before, it was how much? Around 12, 12 to 13, 13 to 67. 67 minus 13. Around 400 times. The key secret is interest rate. So investors, even though at the loss situation, even though at the loss situation, the price was something 16.10 last traded price, right? So they enter. So they don't wait until the interest rate to come down. And then if they wait until interest rate to come down and stabilize in 24, right? So then you are too late. You have to foresee the interest rate will further come down, and because of that, companies like Singer will perform, because when the interest rate come down, the consumption will go up and their financial costs will come down. It's making huge profit for them. So that's the risk you take. So you in 24, 1 year before, you take the risk.
So you are muted.
Hope you can hear me, right?
Recording in progress.
Yes.
Yeah, actually, I had a thought.
You're on mute.
Now okay. Oh, now okay, right? Right, that's the decision you have to make. So that's the decision you have to make. So you need to foresee. So the interest rate, what are the things to come down? That's the bigger picture. You need to understand economics because interest rate is very key area. That's what I say the fantastic way. You need to understand. So see how the 24, only 1 year later, 1.5 years by now, you have to take that decision. Okay, future interest rate now by 24, you know interest rate is coming down, right? By 24, you know interest rate is coming down because you know interest rate is coming down, right? But you don't know whether it's permanent. How low it come down, you don't know. But you know definitely it's coming down. The investors, the smart investors, they won't wait things to happen, things to settle. They foresee it. Then you enter early, right? That there's a saying, that the birds who come early will catch more worms, right? So that's the thing in the stock market. If you can predict, analyze better than earlier than others, you are the winner. Now, technical analysis, the issue is if the particular share is overvalued or undervalued, so everyone can see. There's no unique knowledge, right? Everyone can see. So that's the issue you need to understand. Now, this one, if you go to Singer, if you go to this side, whoever go to this side, you can see the technical buy. So buy this share, right? Whoever go there, I can see it. The sellers, will they sell? No, because it's a buy. So that's why you see have to see. So this one, you can see 1 year return is something 246. We got around 400 or something because we analyze much longer period, right? So 5-year average is 540. The average 5-year average 540. That is annually 100%. So Singa is the best company I can explain in this scenario. All the others, because banking, insurance guys are different, but maybe a little complicated. We'll see, discuss later. Now you have to see what are the things will affect interest rate, right? So that that we can. So here we'll. So this part I have stopped here. No? So now we discuss something. Yeah, I will discuss next week when we meet. So the market interest rate, this part, right? Interest rate, how we can see where it's heading on and all. So that's very essential. So understanding the interest rate behavior is understanding stock market more than half, right? That much is essential. The interest rate, right? I hope you understood. So with that, I'm going to stop for today. We'll start from next week. There are some questions. So when the single made loss, P would be negative. Yes, P was negative. Can you please explain how to view TradingView and other platform? You platform you use to explain. Yeah, you can. I also have a free one, so you can go to Trading Review. Trading View. So I have they have offer also, right? So you can, if you subscribe, you can get many things. You need to have the login, right? I have logged in. It's a free version, but I have account. So then you just click it, you just type it. Single. Scam. So if you Royal Ceramic RCL. So a lot of companies, sometimes it won't come. So then you see Sri Lanka. Yeah, Royal Ceramic Sri Lanka, right? So then Singer, then you can get the chart from loan chart. Then the see overview, you can go to the financial. So they even they mention the financials, right? In the financial, you can go to statistics. They give you the full overview, right? Valuation, everything. And then you can go to statistic. So PE ratio, price earning, you can see. So some are locked because the free version, no, some are not available. And so there is another one, Simple Wall Street. Simply Wall Street. That's one also, if you subscribe, you can get more. So this is the premium. So premium $10 per month. Unlimited like that. So you can single Sri Lanka. So then give you a lot of information, price too. This one only one or two, free version only one or two can see. Valuation, future, dividend, management, right? Like health. So a lot of information is there. You can see in the single now in the RS in I have RSI also, that is above 70 is the overvalue, below 35 something is undervalue something, right? So it is like somewhere here in between. So you can indicators also, you can see technical, you can select this gun. You will learn technical things in later. So then you can see. And if you see the technical stuff, if you see the overview, so then you can go to technical. So all the RSI neutral. So then certain ones buy, certain ones sell. Like that you can analyze. So moving average strong. So those you will cover by those when you are doing those sessions, they will cover. Then okay, how can we understand what's the debt borrowing of the company? How can we understand what's the debt borrowing of a company from the financial report? Yes, you have to check the financial report. I will show you when we move on. So they will give you the debt to equity ratio. Even single, you can see debt to equity ratio. Even balance sheet, you can see the loan. I remember I show you the long-term borrowings in the balance sheet. So where you also can calculate, and they also calculate and give you. Could you please explain the ADFL program and provide detail about the examination procedures? So examination, different lecturers have different methods. So I will give you like a case study, right? So when we are halfway through, like once we cover 4 sessions, so then I will give you a case study where then you can go through and do a report, like 10 to 15 pages report. And most of the time, other lecturers also will have some written exam, some on quiz, different methods. So my one will have a report. So then if you have done the exam, if you pass the exam, you will get the certificate. Like some students, they don't want to get the certificate. So they want what? They want the knowledge. The knowledge is more essential. So then some are not doing, some are doing. But if you pass the exam, you will get the certificate. Yeah. Any more questions? Any more questions before we stop for today? I hope you enjoyed today's session and any more questions?
When you explain on the market turnaround, the daily or that market turnaround, it is the buying minus selling, or otherwise just buying only?
One side, buying, yeah.
So the selling part will not show there.
Yeah. So selling part is equal to that.
So if it is turn around and then its market going up by certain percentage, so it's mean the buying is more.
Yeah. No. It's the turnover is a buy side. Then the market percentage is this percentage is the one side turnover. So the ASPI up by 9% means now you have a gainers, 155 gainers, 77 losers. So this 95 is the average. So you have more gainers. Obvious, no, you have 77 losers, 155 gainers. So gainers outperform. So that's why ASPI up by 0.95.
Yeah, when they said one day, they said turn around this much, but overall market has reduced or going down, it means the sell is more.
Yeah.
Other way around, right? Yeah, okay, understand.
No,
Thank
you can say sell is more, you can have to say the price decrease is more. The losers are higher.
Okay.
Okay. Because when the market coming down, some people are buying. Okay, so now you can see now in this day, market came 25th August, market came down, no? Right? You can see 26 turnovers. How much turnover? That day turnover is 4.6. Total is 5.515. Turnover is there. When the market came down, but people have bought. So the people who bought, so then within this day they cover. The market went up, no? 0.36 minus, but 0.68. So this political thing, when the former president was in jail, the Monday market came down. So the following day, catch up. So when some guys, panic guys, they sold, the guys who bought, they make immediate profit the following day.
So basically it's just buying only.
Correct.
Okay. Thank you.
Any more questions before we stop? Yeah. There's no any question, we can stop. I hope you enjoyed today's session. We'll catch up in the next week. Okay, thank you and have a nice day.
Okay, thank you, sir.
Okay.
Thank you, sir.
Thank you.
Thank you.
Thank you, sir.
Thank you, sir.
Okay.
Thank you.